The fastest way you can live off dividends. Retire early. Dividend investing is a great strategy for providing passive income every month. Unfortunately, one of the biggest drawbacks with this strategy is that it usually takes decades to achieve any worthwhile results. But what if there was a way you could retire sooner from dividends so you actually get to enjoy your younger years? I wouldn't blame you if you thought it was impossible to live on dividends. If you look at dividend-paying blue-chip stocks like Apple, which cost $174 a share and pay a paltry 0.51% dividend a year, you will only get 88 cents a year for every Apple share you own. If your living wage is $50,000 a year, you would need more than 56,000 Apple shares at $174 each to live on dividends. Still, that makes a portfolio of $9,886,363. If you watch this video, I'm sure you'll agree that a portfolio of $9.8 million is unrealistic for most investors. Well, in today's video, we will be discussing the fastest ways you can live off of dividends. But before we start, make sure you like this video and subscribe to our channel for more awesome content. Dividend investing is an investment strategy that involves buying stocks and companies that pay out regular dividends. The appeal of this strategy is that it provides a source of income that is not dependent on the stock market's ups and downs. Instead, dividend investors receive regular payments based on the company's profitability. This can provide a more stable return, which can be particularly attractive in retirement planning and during bear markets. Warren Buffett is one of the most famous advocates of dividend investing. This disciplined approach has helped him to achieve incredible success as an investor. So for those looking to follow in his footsteps, dividend investing is a good place to start. The amount of money you will need invested to live off dividends depends entirely on your lifestyle and how much you plan to spend. According to the U.S. Bureau of Statistics, the average American spends roughly $67,000 per year. This comes out to around $5,600 per month on average. Now you may need more or less than this. Write how much you would like to spend per month in the comments. So it's important that you adjust this number depending on your own personal spending habits. If you're able to be frugal with your spending, you will find that a modest investment in dividend stocks can generate enough income to cover your basic living costs and allow for some recreational spending as well. Of course, the more money you invest, the greater your income will be. But if your goal is simply to retire as fast as possible with dividends, you may be surprised at how quickly you can actually achieve this. So for the sake of this video, we're going to work off an income goal of $40,000 per year, which should be enough money to cover most people's basic living expenses. At its core, dividend investing is a long-term strategy that requires patience and discipline. However, there are two main strategies you can use to speed up the process and get closer to achieving financial independence. One of the fastest ways to live off dividends is through covered call ETFs. Covered call ETFs are a type of fund that allows investors to collect income from both stock appreciation and dividend payments. The ETF invests in stocks, but also writes call options on these same stocks for additional income. Call options give the buyer the right, but not the obligation to buy a stock at a certain price within a specific time frame. So when the ETF sells call options on stocks in its portfolio, it receives premium income that is paid out as dividends. Furthermore, if the stock price rises above the call option strike price, then there may be capital gains that are realized as well, because the ETF will be forced to sell those stocks. Some of the most popular covered call ETFs include QYLD, XYLD, and RYLD. These funds have attractive yields in the double figures, which is significantly higher than the yields of many traditional dividend stocks. The 12-month trailing yields on these covered call ETFs are QYLD, with a 15.96% yield, XYLD with a 14.18% yield, and RYLD with a 13.76% yield. The benefits of these ETFs is that they provide income from both dividends and option premiums, thus providing a more stable stream of passive income. However, these ETFs do come with some risk, as the options may expire worthless, or the stock's price may decline in value. So how much would you need invested to retire with covered call ETFs? If you wanted to earn $40,000 a year from covered ETFs, then at current yield levels you would need between $250,000 to $290,000 invested. Not too bad, right? Especially when you compare this to traditional dividend stocks, where you would need around $2 million invested just to achieve the same level of income. The second strategy you can use to live off dividends faster is by investing in high-yield real estate investment trusts, also known as REITs. REITs are companies that invest in income-producing real estate, such as shopping malls, office buildings, and apartment buildings. These companies tend to pay out a large percentage of their earnings as dividends to shareholders. For dividend income include Blue Rock Residential, Apollo Commercial, and Omega Healthcare. These REITs have solid histories of consistent dividend increases that provide a steady stream of income to their shareholders. According to CBRE Investment Management, U.S. REITs delivered an average annual return of 10.8% in the last 20 years. These yields can jump up and down due to many factors, such as occupancy rates and current market conditions. The benefit of investing in REITs is that they offer higher yields compared to traditional stocks. However, they also come with higher risk since these companies are more likely to be affected during economic downturns. So how much would you need invested to retire with REITs? If you wanted to earn $40,000 a year from REITs, you would need to invest around $400,000. Now, this is assuming an average yield of 10.8%. So the real number will vary depending on whether you diversify into multiple REITs or just invest all your money into one. A realistic way you could retire with REITs is by investing a consistent amount each week and reinvesting the dividends until you reach your desired portfolio size. With proper discipline and patience, it's definitely possible to achieve financial independence through reinvesting in as little as 5 to 7 years. The last thing to keep in mind with investing for dividends is that you should always have a plan. You should know exactly how much money you need and what your goals are. This will help you to determine the best stocks for your portfolio and make sure that you stick with your plan over time. For this, you'll need to calculate your living expenses and ensure that your investments generate enough income to cover them. Maybe you can live off less than $40,000. Or maybe you have a family and will need much more to maintain your desired lifestyle. Another thing worth mentioning is that unlike traditional dividend stocks, covered call ETFs and REITs tend to pay out their shareholders on a monthly basis. This makes them both an even more attractive option for investors looking to generate a consistent income from the stock market. So there you have it. Investing in companies that pay consistent, reliable dividends can be a great way to achieve financial freedom. Whether you choose stocks, ETFs, or REITs, it's important to understand the risks associated with each investment and develop a plan that fits your risk tolerance. With a little bit of patience, you can be well on your way to achieving financial independence through dividend investing. What do you think? Would you invest into covered call ETFs? Or maybe you prefer REITs? Let us know in the comment section below. As always, I hope you enjoyed today's video, and I'll see you in the next one. You can also write an idea for the next video you want to see on the channel.